Folks, I want to talk about some low-risk trading opportunities during earnings season, and you may get a chance to learn something as well. One of my favorite stock plays is to buy stocks that are showing strong fundamental growth while at the same time exhibiting technical congestion or sideways trading action. Now, you've got to remember two things. Markets move vertically and horizontally, and you tend to get lower risk entry opportunities in both stocks and options when the asset is moving horizontally, which typically exhibits lower volatility and trading range to begin with. Now, you might have noticed that stocks tend to consolidate after long periods of momentum and usually experience strong levels of momentum after consolidating. Therefore, it's best to target stocks during the congestion period, especially if those stocks are trending higher in the long term. And most importantly, show substantial earnings surprises, higher revenue expectations, and higher number of analyst expectations, giving them higher ratings. So today, I've got two stocks on my radar that fit that exact criteria and are currently technically consolidating and ready for another bump up in the market, which is likely in light of the liquidity coming in from the Fed and the fact that over 80% of earnings are currently outperforming expectations. That's amazing. And if you've been following me for a while, you know I've been talking about both of these stocks before, and I continue to follow them since they're amazing long-term momentum plays. First stock, CrowdStrike Holdings, ticker symbol CRWD. Now, CrowdStrike Holdings provides cloud delivering endpoint protection, leveraging artificial intelligence, which is huge right now. CrowdStrike Falcon platform, it protects customers against cyber attacks on endpoint on and off the network, which is big. In a nutshell, CrowdStrike is one of the leading cybersecurity companies in the market today, offering a number of solutions, from corporate to cloud platforms to server farms. Now, 1 year return on this stock, and this is a fairly mature stock, is over 200%. 16 strong buy recommendations, and it's got a decade in business and $47 billion in market cap. The company will be a big winner in the coming quarters, in my opinion. And I believe the stock had a bumpy quarter along with the overall NASDAQ 100, but is now roaring back and is trading above the 50-day moving average and is headed to test previous highs. I currently have a price target of about $260 per share over the next quarter. And I believe the stock will be able to recapture strong momentum levels once again. So keep your eye on CrowdStrike. Next stock, now you know I've talked about this stock many times. NIO, N-I-O. It's a premium electric vehicle maker. The company designs, jointly manufactures, and sells smart, connected premium electric cars. The company recently announced that it's moving sales beyond its borders in China into Europe, the biggest EV market right now. 1 year return, 1,229%. It's amazing even saying it, repeating it. The company is currently consolidating after spending several months between the 50 and the 200-day moving average. And it's finally trading above the 50-day moving line again and appears to be headed back to test old highs near the $63 price level. Now, with China expanding at a massive rate, that's an understatement, and the electric vehicle market growing exponentially, I'm seeing more upside ahead in NIO, especially when you consider the fact that the last 4 quarters saw positive earnings revisions and surprises. There's 4 top analysts covering the stock right now, and I believe we'll see price testing old highs before the end of the quarter, assuming the Russell takeoff that we're seeing continues. And we are likely to continue seeing this takeoff in the Russell because the issue between Russell stocks and China isn't as bad as we initially thought. And folks, the truth is we've got a lot of liquidity coming back into the market. Hope that helps. Folks, it's no secret that Main Street investors are fighting an uphill battle against Wall Street's automatic trading machines. That's right. These supercomputers can execute thousands of trades in a matter of seconds, triggering massive stock runs before you even have time to blink. And that really screws regular investors trying to grow their 401k, IRA, or any other investment account. But that unfair advantage, it ends today, right now. I've developed storm technology that mimics the billion-dollar algorithms that Wall Street uses to send stocks soaring to the moon. And now I'm ready to share everything I found, including 5 stocks that are ready for investors to jump in on right now. Click on the link below to access Storm algorithm today and the 5 brand new stocks that it found. And make sure to like this video. Subscribe to this channel if you're watching on YouTube. Folks, you gotta stay one step ahead of the market by being the first to be notified when we post our next video.